Ken, thanks for joining us. So I got to ask you right off the top, is there more room for FedEx to run and the transports to run from here?
Good morning. Thanks, Frank. Yeah, we truly believe there is. When you look at the growth of the economy, e-commerce, you're really seeing a huge increase in demand. And not only that, for the first time in a long time, we're seeing the air freight carriers really focus on pricing. And so that's really going to lead to some bottom line growth. So, yeah, we think there's growth not only left in FedEx, but in the transports as well, just given the level of inventories in the country. We're seeing really low inventories. Our survey is showing some really all-time low levels, and that's really generating some of the core demand for transport you're seeing right now.
So pricing is a very key part of FedEx's business, also its rival UPS's business. Both of them had instituted pandemic surcharges, and they're both doing holiday surcharges. How do you see that playing into the investor confidence into these stocks, but also the performance of these companies?
Yeah, no, it's a great question. We've seen for a long time, we've been kind of waiting for the companies to raise pricing, just given the level of demand that they've got for their product. And this is the first time, not only has UPS has been putting on peak season surcharges since 2016, we're seeing now FedEx add them on for the peak season for the first time. We saw both carriers add in COVID surcharges for residential deliveries to cover the huge cost of the added B2C demand that you're seeing from e-commerce starting on June 1st. So that's really started the change of the shift in pricing demand. Goes back about a year and a half ago when FedEx let Amazon walk away from its network because they were focused more on pricing than just getting volume. So we're really seeing that core focus on pricing, and that's really lifting investor confidence in how they're treating the value of their commodity.
Great point about FedEx basically divorcing Amazon. A lot of people thought that may have been a mistake because they're going to lose that volume. However, volume's really spiked. A lot of that due to the pandemic, but a lot of it's also that lower margin B2C. Are you at all surprised that FedEx and UPS have found a way to make that profitable and actually have some margin expansion?
Yeah, no, I think that's been the surprise to the street. I think that's why you've seen the stocks move the way they have, is because traditionally for the last almost 13 years, as e-commerce has grown, we've actually seen margin pressure. I think what we've seen not only now with density really helping them out with the volume that you're having on B2C, but you're right, the fact that they've been able to improve margins through the pandemic, despite the huge growth of B2C, has been a huge confidence boon that they have turned the corner with their investment in automation, the rollout of 7-day delivery. I think the expenses that they've been almost penalized for over the past year or 2 years actually has now turned into tailwinds for them that we think can really help them over the next couple of years.
All right, speaking of tailwinds, obviously the boost in e-commerce is great for UPS and FedEx, but transports obviously expand beyond that. Trucking and also rail. What do you see this doing for rail especially, that's been lagging, but showing some signs of life actually in the last few weeks when you look at those weekly reports, especially when it comes to intermodal or container shipping?
Wow, you nailed it right there. The growth of intermodal, you're seeing such go back to the inventory comment, how light inventories are right now in this country. And we're seeing such an incredible demand for the product. So whether it spills out from air freight, rolls down to the trucks, we're seeing a huge pricing increase on the trucking side. And that's bleeding into intermodal within the rail. So you've seen, the rails go down 26% between April and May, and that growth has continues to improve each week. We're almost at break even, but certainly intermodal has led that charge, and we're now turning significantly positive on intermodal because of that replenishment demand. You can only imagine what's going to happen once core underlying demand comes back, and then finally, what happens when you really if we start to see a vaccine move. In whether it's a couple of months ahead of election, ahead of the new year, if that starts to compound on top of a peak season, you're going to really see a tightening, exacerbate the tightening we're already seeing. So intermodal, which is spilling over from the trucking tight trucking market because of that replenishment demand, is really boosting intermodal, and that's helping the core underlying rails.
So, Ken, let's look ahead very quickly. It's kind of almost a given that transport's going to do well the rest of the year just because of holiday volume in e-commerce. For 2020, what do you see in the forecast? Or excuse me, 2021.
No, it's a core underlying question because, do we now comp against that huge B2C growth from COVID? And FedEx was commenting that we've pulled forward 3 years worth of growth because we're now structurally changed in terms of people getting used to ordering to the home. So they feel we're going to hit their package 100 million package target instead of 2026 and 2023. And their chief marketing officer, Brie Carrera, said that we're going to see volumes now not turn negative when we start comping against these COVID volumes.